Roku just posted some big news for investors about fiscal 2025, along with an aggressive outlook for 2026. We're seeing strong sales growth thanks to good viewer engagement and the potential for its first big profit year in 2026 after many, many years of losses. But is the stock a buy right now? In this video, I'm going to highlight a few reasons why I think Roku shares do look cheap right now, given the outlook for sales, profit, and cash flow over the next few years. So let's dive right in. Let's start with some of the good news. Platform revenue, that's the main revenue. The ad-driven revenue for the business was up 18% in Q4 and for the full 2025 year. That means that sales crossed $4.1 billion, up again almost 20%. And that was driven, if you look underneath the hood, it was driven mainly by really good engagement figures. Streaming hours were up about 15% for the year to 146 billion. Roku now has 90 million households in its ecosystem, and that makes it the number one streaming platform in the US. And the average amount of viewership has grown over the last year. Total viewing was responsible for about 6% of total viewing, according to Nielsen, by Q4, up from 5.3% in June. So overall, I think that's really great momentum. Engagement is positive, and that's driving higher ad revenue. So the flywheel is working, and that's what investors want to see. Cash flow was also another really big highlight. Operating cash flow more than doubled this year to $483 million, and that's easily a record for the business, the best it's had in many years. And I think it's producing a lot of resources for management to direct towards investing in the business and also buying back stock, which is what the company is doing a little bit of right now. Some of the not so good news, gross profit and operating profit were also not that great. Gross profit was up about 18% for the year, so the profitability figure did not improve. Roku is still losing money on its devices, so it does sell a lot of devices. That's worth about 10% of the business, so these smart TVs that you might see. And it's still burning cash on those sales, so I'd like to see that improve. And I'd like to see overall gross profit margin improve itself. Operating profit is also kind of a mixed bag. It did recently turn positive in Q2, so for the first time in many quarters, Roku did generate an operating profit. And then it expanded over the next 2 quarters, and in Q4, operating profit was $66 million, which is pretty solid. But overall, for the entire year, the company barely broke even, so operating profit was about zero. In fact, the company's only earned an annual profit one of the last 10 years, and that was right in the middle of the pandemic when everyone was at home watching a lot of TV. So we don't have a really good track record for this business yet. However, it's investing is really about the future here, so I think that's what investors are focused on. So let's turn to the outlook and valuation. Management did forecast about $1.2 billion of sales in Q1. This is the slowest quarter for the business out of the year, mainly because of seasonality. But that does preserve the growth momentum that we've seen over 2025, and particularly into late 2025. They are targeting improving profitability after breaking even in 2025, and that seems likely, I think, given the solid engagement that the company is enjoying right now. The biggest risk, of course, is a recession. If that hits, then advertisers are going to start pulling back on their commitments, and revenue is going to drop. And in Roku's case, there's even more of a risk for that than in other things like cable businesses, because a lot of the contracts are short-term for Roku, where in some of the other broadcast TV, people make commitments well into the future. So if there is a pullback, then revenue would quickly start slowing down for Roku. So let's look at the valuation. The stock is currently valued at 2.7 times revenue, which is cheap compared to what we've seen in the last year or so. And it's also really cheap when you compare it to a company like Netflix, which is valued at 9 times revenue. There are some good reasons, though, that Netflix is available at a much more of a premium. The biggest one is operating profit. Netflix's operating profit is high and rising. It's well over 20% of sales, as it has been for several years, and that's expanding towards 30% of sales. And again, Roku is barely breaking even at the moment. And also, Netflix is not reliant at all on advertising. It is using advertising as a bonus, but it's a subscription-based business, and so that makes it a much more profitable, I think, company, much less risky to invest in. Still, I do think that Roku does look like a deal today, below $100 a share, and below, it's somewhere like $83 a share as of my taping here. And that valuation is less than 3 times sales. I think investors can do well by buying the stock around that price. As long as engagement keeps rising and the company has an opportunity, in that case, to build more profitability, I think in 2026 and beyond. So this is the year I think we're going to see some really solid profits and some even better cash flow for the business. And I think over time, Wall Street's going to reward the business in that case with a higher valuation and a higher stock price that's climbing toward maybe $150 a share. So are you a Roku bull or bear, though? I want to hear your thoughts on this business. Drop them in the comments section below and let me know what stock you'd like me to cover next.